Well, despite media hysteria over the administration's strike of Soleimani in Iraq, the markets basically shrugging off Mideast tensions today. And oil, which jumped on Friday in reaction to the U.S. action, spent most of today dropping off its highs. It's now trading below $63 a barrel. So, Kevin, here's the question. Why are investors taking it in stride, taking it so easy?
You can learn so much about the future by looking at the past. I like to go back at history. Remember, this area has been under conflict for two decades worth of conflict. What's different this time, which is really playing out in global markets, providing stability, is you're not going to see oil at $100. Production in the U.S. is so bountiful, is probably the best word now. The threat of having conflict in an oil-producing region just doesn't matter to U.S. domestic markets anymore. And it's played itself into Asian markets the same way. I like to talk to the Swiss every time there's a conflict because they really control so much fund flows all around the world. So I spent my weekend talking to some of my sources there. Didn't even move the needle.
Wow.
And so they are continuing to flow funds into Europe, into North America. They think we'll get 7, maybe 8% if we're lucky out of these markets. That's unusual because the Swiss are really conservative. They think this was a very specific strike, and it shows you the new technology, the new munitions now. You can take someone out in an airport without doing a lot of collateral damage. I'm not saying it's pro or con or what the strategy is, but this is not 100,000 men on the ground. This is an aircraft controlled probably from Jacksonville, Florida, that took out a target.
Yeah.
And the rest of the world understands how that works. And if the administration is going to target more, up to 52 more, it's going to be done the same way. It's not the threat of 100,000 troops moving into the region, at least at this point, and that's why the market isn't affected.
We are, though, seeing American companies being affected. Chevron being the latest that is removing American employees from their location just within the past few hours. They said that they're taking out employees from Iraq due to precautionary measures. There's been some rumors about the Strait of Hormuz, which is, a narrow passageway between Iran and Oman. But I do not believe, based off of the research I've read thus far, that that would be a major target, even though it was a point of contention back in May and June of last year. To your point, or I guess your question regarding why markets are shrugging it off, I think overall, bigger picture, taking away from this news story, it has to do with the Federal Reserve. The fact that the Fed has been supporting this market for quite some time. So it'll be interesting to see how they can pull themselves out, especially with how much money they put in with the repo market. I think that we're ignoring their presence.
The Federal Reserve was supporting the market during the first 10 years of this millennium. But you know what? The market used to move on those terror threat warnings. Remember that? We went from a green to a yellow. We could be seeing, David, the reintroduction of that type of a war premium into this market. Because why? Well, look, it's easy to figure out how many Huggies Walmart is going to sell as opposed to what these mullahs in Iran are going to do. Iran is the #1 state sponsor of terror. They are theocratic and despotic. So we really don't know. This is why I've been saying for weeks now, even though the market's strong, this is a great opportunity to get your financial house in order. Because, David, if you've got your credit card...
that's always a good advice.
If you've got your credit card paid off, you're a better you're a better investor when news like this hits the tape.
But, John, I think that investors are making a calculus. They're looking at the Iranian economy, which is in shambles right now. They realize that if they were to fight any kind of, even a minor war, from our perspective, it would kill the Iranian economy, and the mullahs might fall off of their perch.
Right, and that's actually before sanctions. But, I think Kevin made a great point. We've been there for the last 20, 30 years and so forth, right? But when you look at the bin Laden situation, right, when he was taken out, oil did actually spike before doing what? Pulling back. It's the same. We're seeing the exact same thing. The only difference here is that now America is the #1 exporter of oil. I spoke to an S&P Platts colleague earlier today, and he said, you know what, the oil refinery businesses, they were actually already planning this in for Q1 after the attack, right? So we're not seeing this volatility that we've seen in the past because the dynamics, the economics, things are different.
But, Kevin, I think that they are discounting, that investors out there are discounting the possibility of war for the reasons that I outlined with John. The Iranians can't afford it.
Yeah, but I don't think this is an attempt to change regime. I think we're going to have the same tensions ongoing, and whatever the retaliation is, it is, but it'll be more calculated, be my guess. I actually have energy as one of my top sectors for this next 12 months.
Wow. And you've been holding on to it through the weekend.
Well, it's been dead money for 10 years, but now I'm adding to it. You know, I did my quarter-end adjustments, and I like it because I'm hearing a new discipline with CEOs, even in light of these tensions, to reduce CapEx and return more capital back to me, the shareholder.
I just think
this is a sector I think I'm going to get performance from.
Look, I don't think you fight the tape, but Kevin, I mean, look, the market has been on fire for 10 years. You talk about, you know, Iranian threat. At what point do you think does something like this, news like this, simply become an excuse maybe for investors to take some profits off the table? Could a war with Iran be simply an excuse to sell risk assets?
It should have been, and it didn't, and certainly didn't change fund flows globally over the weekend, so it's not enough of an issue yet. It could be, but if you're deploying capital, and I'm just in the boat with everybody else, I've got to put money to work. Where am I going to put it right now? U.S. domestic large caps look pretty good to me.
Yeah, you just said that it should have dropped lower. It's funny because I was at the New York Stock Exchange reporting there throughout the day, and given the news that we had those strikes, we also had the manufacturing numbers come out for the month of December. You know, we're seeing 5 months of declines over there, and yet none of that really affected the markets as a whole. Right. So one of the stocks that I was looking at was Lufthansa, because a lot of these airlines, you know, financially, if oil goes up, it's going to cost them more, and Lufthansa being an example of something getting hit. I think overall, and I'm going to bring it back to the Fed, I'm going to blame the Fed because there's so much emphasis on monetary policy over fiscal policy. Now that we've entered an election year too, that's going to add to the volatility. I do believe for investors, and again, I'm not the one with a fund or anything, I think going forward, don't laugh, Jonathan, going forward, I think that you got to be a little bit more cautious because it's going to be more volatile.
Well, whatever this conflict is, I think to your point, Kevin, you know, the way we fight wars now is quite different, right, in terms of drone strikes, things of that nature, not boots on the ground, so to speak. But going back to your other point, David, with regard to Iran, their
economy in
their
shambles.
Economy's in shambles, and there's forthcoming sanctions and things of that nature. But this is a different era, right? They're threatening cyber attacks.
So
right? To use a business term, the barriers of entry to war have just been lowered when you actually put
for
cyber
all
attacks
sides,
on the
though. And do you really think that if it's one-on-one, us, the United States, with all of our power, all of our influence, all of our techies going against Iran,
like I've been talking about last week, when you look at this, you know what? I wouldn't be surprised if Iran joins forces behind the scene with certain operatives in Russia as well as China. Because why? They're already doing it to the U.S.
We talked about that last week. It could happen. But again, I don't think, Jonathan, that they've got a chance against our forces to kick back.
Oh, I mean, David, look, the U.S.'s military is unmatched, certainly as opposed to Iran. But the fact that they're up against the wall, the fact, as you said, that their economy is in shambles thanks to the president's maximum pressure campaign. Unfortunately, this is not a society, or certainly not an administration in Iran, that deals with reason. These people are the ones who, you know, strap suicide bombs to their own citizens.
You know, Jonathan, I would argue with you a little bit. I would argue with you a little bit. These mullahs don't want to lose their position, and there is a past here. When we have pushed back in the past, Ronald Reagan did it in the 1980s. He destroyed about a third of their Navy, as ragtag as it was, and they shut up. They clammed up for about a decade. So they do respond to pushback.
Well, to David's point, look, you know, they actually know how to do math. They know that 44 plus 1 equals 45. They don't want to mess around with President Trump.
All right, we got to leave it at that.